Welcome to Money Talks, a weekly feature on FM 93.5 The Berg and WMEG AM 740. Today we will talk just a little bit about money, maybe some of the things you can do with it, how it can impact your life, some ideas on financial planning and investing, and getting the most out of the money you hope to have, already have, or want to pass down. So sit back, relax, listen, and maybe take some notes, as you may have some questions by the time we're done with this edition of Money Talks. Hello, Dan Joss. How are you today?
I'm doing great. How are you?
I'm well. Welcome back to Money Talks.
Thank you.
So, what are we going to talk about today? What's on Dan Joss's mind?
Well, I had a couple people recently ask me about a HELOC.
A HELOC?
So we're going to talk about a HELOC.
Not a SHELOC?
No, it's a HELOC.
A HELOC. Okay.
Home equity line of credit.
Okay, so that doesn't have to be gender neutral now.
No, it doesn't.
Okay. Home equity line of credit. That's what HELOC stands for. Well, that makes sense. How is that different from just a regular mortgage or an home equity
Loan?
Loan, yeah.
Loan? Well, it's kind of like a mortgage. You put up your house in borrowing available funds, and your house is on the line. But it's a line of credit, so it's a little bit more like a credit card, where you can use it when you need it, but you don't have to use it. So a mortgage, you have to make the payments.
Right.
A home equity loan, you get a big amount up front, and then you have to make monthly payments. A home equity line can be used or not used. It's just available.
Okay, so you've got the fixed mortgage, the traditional mortgage, and then maybe there's some leftover equity in your home and you wanted to go out and put an addition on your house or something like that, renovations.
Sure, fix up the kitchen or put a she shed out back.
Sure, or a he shed to go. So then that would be another fixed mortgage payment, but this could be a home equity line of credit, so it goes up and down with what your needs are. And do you have to pay interest on that every month, or principal and interest? Or
typically, it's interest only.
Okay,
but you can make extra payments until it's eliminated, and then you have the whole line available for future use.
Okay, so why would somebody want this? It's still like a second mortgage.
It is a second mortgage,
assuming there's a first.
Yep.
Yeah. Why would somebody want something like this? What would the pros of this be instead of a traditional mortgage?
Well, a pro is that you have credit available to you if you need it.
Okay.
And so in one sense, it's an emergency fund. If an opportunity comes along and you don't have investments, or they're illiquid, or you're not sure of the tax ramifications of other funds, you can use this and then decide how to pay that off next.
Okay.
So you can bring a checkbook with you, write it, and be done with it. And then you start making interest payments, and then figure out, using your other resources, how to pay that back.
Okay.
But liquidity, and it's immediately available, is the best part of it.
Right, because to set this up, you probably already have gone to the attorney's office or settlement office and done all the paperwork. So it's just sitting there, and it's really as simple as writing a check.
Yep. Yeah, you go to a bank. A local bank may offer a line of credit.
Well, we always like local banks here.
And so this would be a line of credit, but your house would be there, which brings with it possibly a lower interest rate than a credit card for sure.
Okay, because it's a secured loan.
Mm-hmm. Depending on what you use that line for, the interest may or may not be deductible.
Okay.
So talk with your tax preparer about that.
Right.
And then it's there when you need it.
All right. So what would some of the cons or downsides to this be?
Well, a con is you need to have equity in your house to be available to have a home equity line of credit. So if you don't have a house and you don't have equity, then it's not available to you.
Okay, that would be a downside to it.
But depending on, rates are the rate of the loan typically are not fixed like a mortgage is.
Right.
Like most mortgages are.
Okay.
And so if rates go up, you may see your borrowing cost increase a little bit.
I like how you said that, your borrowing cost.
Yep. So
that really brings it home there, doesn't it?
That's right.
Borrowing cost.
And you're mentioning home.
Yes.
Your home is on the line when you use a HELOC.
That's right. Okay.
So rates could fluctuate. you could get locked out, or your HELOC could be frozen. We saw that back in 2007 and 8. When house values dropped, then there's no more equity, and so they freeze the line.
Well, that's just cold.
That's cold.
Yeah.
But it happens.
Okay. All right.
And so there are some cons. It's not simple, but I recommend many of my clients to get one, particularly before they retire, because once they retire, it's very difficult to get the HELOC.
You know, that's a great point you bring up right there. If they've retired, then they don't have the income stream showing that they can make the monthly payment.
Right. And because it is a second, they don't have a chance against the primary mortgage, and so they want that income. They want the income stream before they offer to you.
Well, those are all great points to bring up with this thing, and that's the very brief story of a HELOC.
That's right.
All right. So, do you sell HELOCs?
No, I don't.
You don't sell HELOCs, and yet we're on the radio talking about HELOCs.
That's right. It's a great tool to have.
Okay.
It can be useful. There's pros and cons, so talk with your advisor about it.
Right.
And,
but just like any tool, if you use it wrong, you can lose a finger or an eye.
That's right. Well, in this case, you'd lose your home.
Okay. Well, let's make sure we don't use this tool wrong.
Yep.
All right. Well, Dan Jost, do you have any closing comments you'd like to share with our listening audience out there?
Not today.
Not today. Really? Not even a phone number or a website?
You could check out my website, jostfinancial.com, and I have a short quiz just to see how you're doing financially.
Okay. Well, good. And if they wanted to call and speak to Dan Jost personally, what should they do?
757-903-2127.
All right. Well, Dan Jost, thanks for being part of Money Talks today.
Thank you.
Money Talks is a weekly program presented for the listener's benefit and entertainment. It is provided at no cost to the listener, and the ideas, opinions, and comments are not to be construed as legal advice, tax advice, investment advice, or other advice specific to the listener. Listeners are encouraged to seek the advice of a licensed professional or other qualified party when dealing with financial, legal, tax, medical, investment, insurance, taxidermy, plumbing, electrical, carpentry, real estate, chiropractic, veterinary, oral hygiene, hot air ballooning, etc. We have given you some food for thought. Now, call a licensed professional such as Dan Jost at 757-903-2127. Thanks for listening, and remember, failing to plan is planning to fail.